Good afternoon, this is Sage live from 𝐊𝐴𝐴 Studios in Sydney. It's lunchtime here and you know what that means. It's time for the Mid-Market Pulse show. Let's zoom our lens on the Australian share market's performance midway through the day today. The Australian shares were trading marginally lower by the afternoon, reversing the opening losses, supported by buying across the healthcare and the tech stocks. However, selling in the energy, mining and utility stocks was dragging the share market lower. And the weak global cues and alarming COVID-19 surges in the country also have dented the market sentiment. The S&P ASX 200 was trading lower by 9.10 points or 0.12% by the lunchtime. And early today, the index opened lower, tracking the panic selling on Wall Street and global equities market, declining as much as 1.1%. Now, concerns about the COVID-19 situation in the country continued to weigh on the market. In the last 24 hours, New South Wales has reported 78 new locally acquired cases, while Victoria's recorded 13 new COVID cases, including 4 announced yesterday. To contain the spread of the virus, the government has decided to impose a lockdown in South Australia, while Victoria has extended its restrictions by a further 7 days. And moving on now to the sectoral front. 7 of the 11 sectors were bleeding in the red, led by the energy and materials stocks, and energy was the worst performer with 1.5% losses, followed by material, which dropped over 1%. Telecom, financials, industrials and materials were trading lower, over 1% each, and bucking the trend, healthcare stocks witnessed a surge in buying for the second day, rising 0.7%. IT sector was also up 0.4%. Let's now turn our attention to the biggest gainers and losers that captured the investors' attention by the mid-market session. Oil and gas producer Oil Search was the top percentage gainer on the ASX pack, rising 4.6% on proposed mergers with rival Santos. The company is in an ASX filing. Said Santos has confirmed it submitted a confidential, non-binding, indicative all-scrip merger proposal to the Oil Search board in late June, and as per the deal, the Oil Search shareholders would own 37% of the merged group and Santos shareholders would hold 63%. The ownership ratio implied a transaction price of $4.24 Australian per Oil Search share. And some of the other notable gainers were fintech firm Zip, healthcare player Mesoblast, corporate bookmaker PointsBet Holdings and gold miner Silver Lake Resources. And on the flip side, the real estate player Unibail Redemco Westfield was a top loser on the ASX, falling 5.75%. Some of the other worst performers include oil and gas major Santos miner, Nichols Mines and English bank Virgin Money UK, as well as the energy firm Beach Energy. On this note, let us shift the focus now to the stocks that are creating a buzz today. Let us look at the first company. The shares of Australia's largest BNPL player, Afterpay, were down 1.5% at $103.25 Australian, and the fintech major has announced that it will launch a new banking app for its customers in Australian markets come October. The new money and lifestyle app Money by Afterpay will be rolled out in phases with a staff pilot at the end of July, with the aim to launch to the market by October. And the Money app will be launched in collaboration with Westpac, which will pay Afterpay servers an interest rate of 1% per annum. Let's now take a look at the next company. Shares of iron ore miner BHP Group fell 2.3% after the global resources company released quarterly business updates. The company reported a full-year iron ore production near the top end of the forecast range, supported by record output at 2 mines in Western Australia, and the surge in commodity prices is likely to help BHP post the bumper full-year profits in August, alongside rivals Rio Tinto and Fortescue Metals Group. And moving on to the next share, the price of corporate bookmaker PointsBet Holdings rose over 1% to $11.65 Australian on a deal with Cliff Castle Casino Hotel. The company said that its wholly owned subsidiary PointsBet Arizona has entered into an exclusive agreement with Cliff Castle Casino Hotel to pursue online sports betting market access in Arizona. And Cliff Castle Casino Hotel is a subordinate economic organisation of the federally recognised Yavapai Apache Nation. Let us now look at the next company making the news today. Shares of Auscan Group Holdings jumped nearly 5% to reach 11 cents after the company started a product registration for dogs. The pharma company has submitted its first module to the Australian Pesticides and Veterinary Medicines Association to start the registration of Dermacan. And now it's time for a short break, but please stay tuned. I'll be back with more of the trending updates right after this.
New Zealand is unique, and 𝐊𝐼𝐴 TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐊𝐼𝐴 TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐊𝐼𝐴.co.nz.
Welcome back, this is Sage. You are watching live from the Sydney studio of 𝐊𝐼𝐴, the Mid-Market Pulse, and we're discussing the ASX stocks that are in the news today. Insurance Australia Group, the largest general insurance group in the country, saw its shares falling 0.8% to $4.79 Australian, and the insurer has appointed Tim Plant to the newly created role of Chief Insurance and Strategy Officer. Plant is expected to join the company before the end of the year. Taking a look at the next company, shares of software firm Altium extended losses for the second day and fell as much as 5.9%, down to $33.10 Australian. The stock is under pressure after the company failed to secure a fresh takeover offer from the US peer Autodesk Inc. Autodesk said on Monday it ended the takeover talks with Altium weeks after the Australian firm rejected its $5.05 billion Australian dollar offer. Taking a look at the next ASX listed share in the news, real estate firm Dexus shares were down 0.8% to $10 Australian 16 cents after the company announced to fund, develop, invest in Atlassian's development. The company has entered into binding terms to fund, develop and invest in Atlassian's new headquarters in Sydney, located adjacent to the Central Place Sydney development. And now the next company making the news is the Australian Real Estate Investment Trust Charter. Hall Long Whale, or WALE, shares fell 0.6%, down to $4.87 Australian, following an update.
Hi, this is Andy Liu broadcasting from 𝐊𝐼𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐼𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐼𝐴 TV and join me.
Thanks for joining us, viewers, as we take you through the ASX listed companies that are making the news this afternoon. Let us now look at the next company, Australian Real Estate Investment Trust Charter Hall Long Whale, or WALE, shares fell 0.6%, down to $4.87 Australian, following an update, and the company has entered into a lease agreement with Fujifilm for Building C at 56 Edmundston Road in Bowen Hills, Brisbane. The company is set to release its financial year 21 results on August 9th, 2021. Taking a look at the next share. The share price of Sydney Airport was trading 0.6% lower at $7.86 Australian after data showed that its traffic was impacted by the lockdown, and the Australian's only listed airport saw its domestic passenger numbers falling 56.8% in June versus the corresponding month in 2019. International passengers dropped 93.8%. And let's move on now to the next ASX listed company on our list. Plumbing parts group Reliance Worldwide shares rose nearly 0.9% to $5.25 Australian on plans to acquire copper-based alloy producer LCL Limited. The company has entered into an agreement with LCL Limited to buy business for cash of around 37 million Australian dollars. Now we'll turn our heads east to the Asian markets. Most of the regional stocks were trading lower in the opening deals, tracking weak cues from Wall Street, and Japan's Nikkei was the worst performer in the region, falling over 0.6%, while China's Shanghai Composite was also down 0.5%. Seoul's Kospi also traded lower by 0.3%. In a similar trend, Hong Kong's Hang Seng was down 0.25%, while Taiwan's weighted stock index fell 0.6%. And hopefully that has been informative for you. Thanks so much for joining us on that report. That's all for now, but keep watching 𝐾ALKINE TV as we bring you the latest news and trending market updates live from Sydney. Sage signing off.